Welcome back to another episode of the Vet Worthwhile podcast. I am James Yost, partner and wealth advisor at SignatureFD, and I'm joined as always by my co-host Travis York, owner of 3-1 Advisors. Travis, how are you?
I'm doing great today, James. How about yourself?
I'm doing well. We are back with another episode of the Vet Worthwhile podcast, coming at you from the SignatureFD studios in Midtown Atlanta. You got James Yost and Travis York. Our guest today is our dear friend, Eric Josovitz. Eric is the founder of AdaptCFO. He's also very involved with Ronald McDonald House. Eric, welcome to the podcast. Thanks for being here, man.
Thanks, James. Appreciate you having me.
Yeah, buddy. Travis, why don't you get us kicked off?
I'm ready to go, Eric. I've been excited about this one. This one is, as somebody who's kind of started their career in lending, learning about quality financial statements is always probably too exciting for me. But I mean, you've had a little bit of a different path to kind of starting to explore creating small business financial statements and specifically veterinary hospital financial statements, probably than many other people. Can you maybe just share with our listeners a little bit about your journey in getting here, and then how that journey has kind of shaped your thoughts on the importance of, quality financial controls, understanding your financial statements and having those in a timely manner?
Yeah, definitely. Thanks, Travis. Appreciate you guys having me here. Been close with you guys for a while now, and this is long overdue. So I kind of have a diverse background. Right now, owner and CEO of AdaptCFO. We're a strong team of about 5 full-time people, and we really just focus on optimizing outsourced accounting and finance for our clients. Now, that's what I'm currently working on, but take you guys way back. I was born in New York. Grew up here in North Atlanta, Gwinnett County, got a football scholarship to West Georgia. Realized that I didn't want to go that long route. And funny story, I was actually a biology major pre-med at one point. So transferred to Georgia State, left the scholarship, asked my mom, what's the best business degree I should do? And she said accounting. Reason being is accountants always have jobs. I still have a job. So, fast forward to my junior year at Georgia State, accounting major. I started working at an accounting firm full time. By the time I graduated, I had 2 tax seasons under my belt. So between tax seasons and just working with clients on their books, optimizing, cleaning things up, I had a job when I graduated. So I was there for another 2 years. And funny story, I actually wanted to switch and go to sales because I heard that's where the money is. Had a couple interviews. It didn't go so well. And somehow I landed in a head of finance job at a startup marketing company. So from there, I went into the medical field, kind of head of finance, CFO track. And after 2 acquisitions, I figured, why not start a company that can do everything that I've been doing, including the departments I've been working in, and just offer everything from just basic bookkeeping all the way up through CFO services. And that's kind of me. I live in Alpharetta, Georgia with my family. I got 3 kids, all under 4 years old. So just like you guys over here, I've been head down making babies. And
I mean, James isn't even in that ballpark yet. He's anxiously awaiting number 2's arrival.
That's right. Could have happened during this very recording. We'll see. That's awesome. Thanks, Eric, for sharing that background. So that journey, you've been with different types of companies, you've worn different hats, some within the medical field, and now you're providing that outsourced service to many clients. And I've seen the work you guys do and just see the way that you're able to leverage technology to make things more efficient, which is fantastic. So how has that journey that you've been on kind of shaped the experience that you're now trying to provide for those clients as an outside service provider as opposed to someone who's internal?
Yeah, that's a great question. So everything we do has both a technology focus and our expertise. So that's our mission, is to deliver high value expertise, CPA, finance experts paired with a up-to-date technology. And there's obviously so much out there between AI, RPA, which we won't even get into. But on the accounting and finance side, there's a lot of new technology that people still aren't utilizing, anywhere from payroll to accounts payable processing through just simple bookkeeping. right? So just going back to my early days at the CPA firm, I was the young kid getting thrown in the fire. And I ended up at a lot of offices offsite where there would just be stacks and stacks of paper, and I'd have to comb through them to get everything updated because the president of the company fired the third bookkeeper that quarter. So that I kind of learned everyone needs like this cleanup service. So we have our like, that's what we do from the start. We don't start anything unless we're able to clean up the books, optimize the chart of accounts. And that's kind of like, that's your foundation.
Yeah.
So, and even taking a step back further, I was the kid at the firm that knew QuickBooks Online. We had a laptop. Back then it was like, it was unheard of. We had file cabinets. I had to get everyone on the cloud. I was the kid on the Apple computer, and I would take that laptop out to clients. It was funny, but now everyone is on QuickBooks Online. So first thing we'll do, if they're on QuickBooks Desktop or they're on, another server-based, not in the cloud, we'll immediately get them transitioned over.
Yeah.
And from there, we'll clean things up, which is super important. And then we'll start optimizing. I've kind of placed that across the organization, and the entire team knows that we are optimizing the accounting and finance for the CEO point of view.
Well, when you say optimize, right? You're really like, context of that word optimize for our listeners is like, it's not like you're trying to optimize and reduce the number of GL accounts in the chart of accounts or places that our expenses are recognized or revenues recognized. When you use the word optimize is creating effective reports that somebody can look at and understand the business, correct? Like that's the foundation of good financial reporting in your opinions?
Yeah. And the reason why you do that is because we're not just doing the books monthly so you can do your tax return at the end of the year. You need to get value out of them. So when I say optimize, it's making sure you can look at it in an easy manner. You can jump in, get the numbers you're looking for, see how you've performed, through a specific period, or see where your cash, your liabilities, everything stands, as of that position that day, and get something out of it.
Well, so you said something that's kind of interesting. I mean, I've been in the vet world now for really my entire life, but you said that you don't just prepare books to do tax returns. Can you expand a little bit on that? Like why would you say that? That seems kind of foolish. I thought you just made sure you got your books done and sent them into Uncle Sam on April 15th and moved on. Yeah,
you're exactly right. We don't do that so you can file your taxes. We have a couple clients that have, they just have startup fees and they haven't quite gotten the practice off the ground. But at that point, we're doing it annually. And most of the time, you're going to get your business off the ground in a couple months or quarters. It's not going to take more than a year. So if you actually want to focus on growing a business and not just creating a basic lifestyle business that, you're just fighting tooth and nail every day to just serve your customers and bleed cash. A business is like a baby. You have to care for it. You have to put money away for it. You have to invest long-term and short-term. And that's the same way a business is. So whether you like it or not, the bottom line, your earnings that come out of the business, it affects every day. It changes whether you understand the way your business operates or not. That's going to determine how hard you're sweating day in and day out.
Yeah, that's awesome. So like for our clients and our listeners specifically, who many of whom own a veterinary hospital, a lot of them are aspiring to own a veterinary hospital. So like when you come into this situation, I know you have a lot of experience with different healthcare organizations as well, and we use so much jargon in the investment business and I know it's all out there. So how do you simplify that in, I don't want to say dumb it down because that's the wrong word, but simplify it in a way that in terms they understand so that they can actually make informed decisions?
There are your top KPIs that you need to look at. You need to understand what those KPIs are that are going to drive value to the business. And that's what you need to focus on. So,
which could be different for every business, right?
Absolutely. But if you're hung up on office expenses, going up every month, you might be missing, the big takeaway that last month or that last quarter. So just from a high level standpoint, you have your profit and loss standpoint, your profit and loss statement, and your balance sheet. Your balance sheet tells you your financial position. That's where you are as of today, as of last month, as of last quarter, last year, and you can do a comparison, right? You need to look at your cash, total assets, total liabilities, and those are kind of your three takeaways. There are some KPIs that kind of see how your position is from a liquid standpoint, how liquid you are.
Mm-hmm.
And if you were to, let's say, sell all your assets, what you'd be left with. There's some simple math to get there. But the profit and loss statement or income statement is over a period of time. So how have I performed over the last couple of weeks, the last couple of months? And then you can compare that as well to previous years, previous months. And the big takeaways there are obviously revenue, gross profit, gross margin, and net income.
Yeah.
And obviously, if you want to get all technical, EBITDA. And But I wouldn't try to overcomplicate it. You need to just grab the simple numbers and hold yourself accountable. Now, if you want to take it a step further, you can create a simple budget that says, hey, I want to spend this much based on how much revenue we're going to have, and drip that down into your accounts. And let's say you're looking at June, you could say my cost of goods sold, how much I was spending on drugs, doctors, whatever it may be, should have been this number, and we went over or under. So everything kind of tells a story. It's a novel, and woven inside of that is how you've been performing, and the question is, can you optimize and can you add more value to your business by looking at the numbers?
Yeah, I mean, without the data too, like without clean, good data, you can't tie it back to specific decisions and specific things that take place within your practice or your business.
I mean, I guess I've kind of always thought about it, and like you added just a whole nother layer to this with like your whole optimized sentence, right? Like I've always, when I've talked to veterinarians and communicated that you like, they have to think about their financial statements the same way they think about like blood work that they run on a patient, right? Like it's really no different. Yeah. There's data and information that comes in, and there's results that come out that help guide you. It doesn't necessarily tell you exactly what to do, but it helps guide you. But the piece that you added is like, if you think about, blood work, it's really only as valuable as the calibration that has been done on the system that's running it, right? Yeah, I think probably a lot of our vet listeners know that if you're not regularly calibrating those chemistry machines, you're going to get bad results. And bad results then lead to bad decisions. And oftentimes in their case, it could lead to, some consequential decisions. And it's not that vastly different in business. If you don't have somebody calibrating those financial statements correctly, you can get some really bad data and make some really bad decisions.
That's a great point. And I wouldn't want anyone that isn't a doctor looking at my lab results, because you're going to read them wrong and you're going to give me the wrong medicine. So obviously there's stuff that you can take away from a high level, understanding what needs to happen from a holistic point of view. You don't understand what you're looking at. Yeah. I say, get some guidance, watch some YouTube videos, pull some white paper.
Having spent a lot of time with veterinarians, like I'd probably avoid the YouTube because it's kind of like Dr. Google, right? Like you don't really have to have any qualifications to go post a YouTube video. You just need some time. So like that kind of brings up, I think, in my opinion, like another really important point, right? Like it's totally good. Like we're rolling into June 30th right now. So like you're normally sitting down with your clients and looking at like first quarter numbers right about this time, right, Eric? Like that's good information, or is that something where like it's that information so old that you're making decisions that are outdated? How do you and your team think about getting timely reports to clients so that they can make informed decisions?
I've seen everything across the board. I've seen the books closed a month later, 2 months later. We don't do that. we focus on 10 business days. And it's actually funny because we have a client right now that said in his previous gig, they closed -2 business days. So I know it doesn't make sense, but what he said is that they become great estimators.
Yeah.
And he came from a very large Fortune 100 organization. But some clients we can push to like 7 business days, having the books closed, but we never push past 10 business days. And that's because you're not going to gain any insights to be able to make decisions. If you're looking at, like, if I just closed February, well, February is long gone and the numbers have changed. So
I mean, I guess it's kind of like, again, I hate to use my blood work reference, right? But like, I take my dog into to the vet, and it's June, what is it, June 29th, June 28th, and he's sick and vomiting, and the veterinarian recommends that we do some blood work to kind of see what's going on. And I say, nah, doc, I don't really need that. I mean, he was in November. We have blood work from November, right? Like, I mean, that works. It probably is about the same thing.
Yeah, it doesn't work that way. And fortunately and unfortunately, there's options out there where, and look, if you're scrapping by on the weekends to close the books and get your numbers in for your practice, you're probably looking at a couple of weeks after the month is over that you're going to get any kind of insight.
So like when you're out meeting with people, you're meeting with small business owners, what are some, and you start to take a look at the business and, they're asking for your opinions, and what are some of the red flags you see where you're like, okay, like I'm immediately going to make an impact here? Because I think if we could put it in that context, like some of our listeners may or may not, no offense to anyone, may or may not think of themselves in these ways. So what are your thoughts there?
Yeah, there's a wide range of mistakes that I see. Obviously, using the wrong accounts is a big one. You just don't know if you don't know. So knowing where to put certain transactions, and for example, using the AHA chart of accounts or a simplified version of it to actually gain insight versus some chart of accounts that you picked up through like a QuickBooks online.
Wait, so Ask My Accountant is not an appropriate expense account for 30% of your expenses?
Yeah. If you're putting the majority of your expenses in there, I'd say it might not be the right way to do it. Now, to drop in a couple of transactions a month, and it really just depends if you have an accountant doing it or you have a basic bookkeeper. There are levels to this game, and you have everything from the practice owner, the veterinarian doing the books, the doctor, to just a basic bookkeeper that might not know the advanced work, all the way up to an expert CPA. So they're going to put all three of those different categories. They're going to put transactions into different places. And the way we approach it is always CFO down. It's from being able to take strategic insights out of those numbers versus just entering them because they're going to go on a tax return.
Right. The difference. Yeah. So I think it would be useful to just kind of think through what it would be like in 3 different scenarios. So the first is someone who's budgeting to start a veterinary hospital. So like, what would that look like? Because obviously that's different. Then maybe one that has 4 or 5 doctors, does $4 million in revenue. Like, what does that look like? And then a massive big hospital with 50 docs. Like, what are the kind of different things you would be doing? And like, because obviously your services are going to be different based on where they are in their maturity life cycle.
Right. So there's obviously different levels. You want to start off with something basic. Now, if you're pulling yourself into the accounting and the finance, you're obviously taking time out of when you're actually working with patients versus, maybe you're doing things on the weekends, taking time out of your family and your work-life balance. So from the bat, you probably want to just get some bookkeeping in place. You might not need, someone doing the payroll, the accounts payables, and managing kind of the operating accounting. But when you take a step up to a practice that's really performing well, you need your accounting optimized, meaning, closing the books less than 10 business days.
And they're growing and scaling.
They're growing, scaling. They need quick numbers and insightful KPIs. So they also need an operational partner that's going to be able to assist them with accounts payables, paying their vendors, and also having controls around those processes where money's not just flying out.
Yeah.
So being able to also outsource those things and allow someone else that's not as close to you, you're going to also have some fraud.
I love to like kind of hitting on that, right? Because shrinkage is such a massive issue in veterinary hospitals, whether it's intended shrinkage, like a bag of dog food walks out the back, or it's unintentional, right? Like just kind of understanding some of the things that are unintentional that people just aren't even aware of, those accurate financials, outside eyes that are kind of trained in that audit process to see it, makes a big difference.
Yeah. And having the internal controls around all of those processes will allow you to dedicate more time to other areas. And you might not realize, but you might be spending twice the amount of time on accounts payables that you need to. So we'll just do weekly AP. We run through, find out what's open. We do a quick weekly meeting, and it's, hey, these need to be paid. And that's it. We check, sign off, we submit the payment, and someone approves.
Well, you always have to think about it like this, right? I think attorneys are great at it, right? Like, oh, wait, okay, I can make $400 or $500 an hour working, and I can pay somebody $150 an hour to do this. What should I do?
Yeah.
And it's like, oh, wait, okay, if I work for 2 hours and I make $1,000 and I pay somebody else $300 to do the work I would have done that time, unless I passionately love paying bills and that's what I was put on this earth to do, it probably doesn't make sense, right?
Yeah, especially if it's a couple subscriptions, that you probably don't need, you could just cancel. But no, just going back to your question. Yeah. So really there's four big ones, and that's closing the books, payroll, accounts payables, and then, maybe just a bonus is having a dashboard that you can look at not a month later, but within a couple of weeks of the month ending that says, hey, this is how we did last month, and this is where we are. If we want to grow, we can grow. But if you don't have insight into that detail, just a crazy level of detail, you can't grow your business, which maybe you don't want to.
Yeah.
Well, I always feel like it's a balance, right? Because James, kind of circling back to your core question, right? You're just starting up, you're there every day, you're grinding. There's obviously value in dashboards, but let's be honest, that person that's in the hospital 75 hours a week, touching and doing everything, probably has a really good feel on that business. And while the dashboard may add value, it's maybe not as much value as when you get to 3 locations, a dashboard that you can start to drill down into. That's what allows you to build scale to your business, because just quite frankly, you can't be in every hospital every day. And, you're going to have to know how to sit down and talk with your team. And that's where I really see, again, we're seeing a lot more veterinarians who are super entrepreneurial and interested in how you build scale, and dashboards and knowing where to put those dashboards and how to look at those financials really does allow you to know where to invest those growth dollars and that growth time.
Yeah. I've just seen too many times with a vet who's either staying late once a week or once a month, or coming in on a Saturday every week to go back and try to clean up their books. And I don't think they understand that there's solutions out there, especially now with technology, that can be very efficient in doing that for you with a partner like you. So it's very interesting to hear, that perspective. I think it's really good for the listeners.
Well, and, I guess I'll kind of use that as obviously when you're doing it yourself, pretty much everything you're looking at is definitively retroactive, because you're just barely trying to keep your head above water, right? So maybe you can talk a little bit, Eric, about how you guys use proactive and retroactive analysis and incorporate that into how somebody effectively incorporates that into their financial reporting process.
Yeah, that's a great point. So obviously retroactive is important because it's showing how you've performed. And without retroactive, you're not going to be proactive and look forward, because you got to take whatever trends that you've looked at and, escalate those out. But, the world of the CFO or the finance department, it's kind of evolved over time, and it's been retroactive in the past. Let's make sure we're compliant. We have our licenses, we're filing our tax returns, and we're kind of buttoned up. We're making sure that people aren't stealing from us and like your basic stuff, right? And now that role is forward thinking, because there is so much opportunity here in the US that you can look at how you've done. You can optimize it by saying, hey, I'm going to maybe spend less in this area, or I'm going to negotiate with a vendor, or I'm going to go stand outside with a sign and bring in more dogs, more the dog park. But being able to look forward is the next best thing. So what I would encourage everyone to do is to look at where your margins are, right? Just look at your revenue, look at how you've grown, try to do some kind of rolling forecast. And that's one thing we like to focus on, outside of the accounting and bookkeeping, which is all very important. But if you're trying to grow and ultimately you either want to sell your practice or you just want to have a profitable business, look at where you're going to be in the next 6 to 12 months. You don't have to create something, a 3 to 5 year plan. Start with something that's looking forward and say, we're maybe overspending in these categories, and just write down all your profit and loss accounts from revenue to your cost. You can go into a little bit of detail on what exactly those costs are. You don't have to expand them out all the way. And then look at your operating expenses, from your full-time employees to just your overhead, and see how you can be more involved with the dollars in your business, because the reality is every dollar counts, especially when it's a tight margin business.
Yeah. Well, and I do, and we want to probably we're kind of getting down to the end of our time here, but you're just kind of thinking about applying this to what's happened in the past and some of the conversations that you and I have had. And one of the things that I'm really focused on now, Eric, is just exit planning. Like what's happening in the veterinary space is requiring far more proactiveness around exit planning, right? One of the foundations of that is clean financial reporting. And James, I can't tell you how many conversations we had in 2021 with veterinarians who are like, you know what, I'm going to get a hold of my CPA. We're going to clean up my books, and I'm going to come back and sell my hospital beginning of 2023.
Yeah.
And, they didn't have clean books. They kind of muddled their books, and all of a sudden the market turned on them like that. And, if you had accurate and clean and well-maintained books, you can be prepared and ready and proactive for when that next opportunity arises, whether it's growth and you want to go to the bank and get capital to put in a new hospital before somebody else takes the next prime market in town, or you want to sell before the peak is out. Like your financial statements, it's really the lifeblood of your business.
Yeah, that's spot on. That's it in a nutshell. You can be either proactive or reactive, but from looking at the numbers or just being able to make business decisions, even if you're doing things on a monthly basis or a frequent basis, whether it's quarterly, monthly, obviously doing it more often than not, you're going to be able to make those proactive decisions. So I guess proactive and reactive can mean two different things here.
Yeah.
Yeah.
Before we go back to Travis for the last question, you had touched a little bit on AI earlier. I think it's a hot topic. Everybody's talking about it. Funny enough, I don't even think I shared this with you, Travis, but like our team has been asking a ton of questions internally to staff about AI and their job security and things. And, it hadn't really crossed my mind. I'm thinking like, how are we going to be more efficient? What are the things we can do to improve? So what are some of the things you're seeing out there in the marketplace? And, with your background starting out as the one who knew the technology, which enabled you to then go out and scale this business you've created, do you see a ton of opportunity? Do you see a ton of risk? And what are some of the things you're seeing in AI?
Yeah. I mean, the elephant in the room is ChatGPT, right?
Yeah.
And Google has something out there. But taking a step back, in the accounting finance world, there's something called RPA, robotic process automation, that came out like 15-ish years ago that enterprises were trying to implement. And I won't go down the rabbit hole here, but there are some companies out there that allow you to do some like basic admin work. So like you have a form that you have to fill out, and instead of having to go in and fill out that form every time, you have a little bot that's trained to go and fill that form out for you. So there's like, AI has already been on the radar for a while, but for the public, ChatGPT is it. So
they can like feel it and see it and play with it, right? That's the only difference between
exactly. Yeah. The others was untouchable. Right? You had to get a consultant come in and implement it. Now anyone can download ChatGPT on your phone, on your computer. Now on the computer, there are some integrations that you can start adding to like your apps and stuff, but we won't go there. If you want to just download ChatGPT, there are what they call prompts, which allow you to ask questions or take actions that will lead to a better result. So a couple basic use cases are emails. So you're writing an email to a client, like that's one thing that we do. We might just drop it in there and say, make it better. Right?
But like, I feel like that's kind of the whole thing with AI. When I think about like some of the accounting conversations, the finance conversations, like AI is incredibly valuable, right? Like, I mean, I just had to write a letter, and like I wrote a letter, and if you would have taken my letter, it would have been terrible. I asked ChatGPT to make it look really nice. ChatGPT wrote this letter that everybody's come back like, wow, this is wonderful, right? Yeah. But if I would have just said, hey, here's 3 data points, ChatGPT, like go do this. And I feel like that's kind of like some of the like the obstacle in financial reporting with AI is it's uncalibrated. AI has not figured out how to calibrate itself. And so if you want uncalibrated results, like using AI works perfectly. But you have to decide, do you want to go back and calibrate what you get out of AI, or do you want to work with somebody who can calibrate that for you?
Yeah, there's the 3.5 version, which is free, and then there's a 4 version, which is supposedly way better. But still, to your point, James, I don't think it's going to automatically replace any profession. It might replace the professional, utilizing their time more.
Some of the tasks can be automated.
Yeah. But yeah, I mean, you can ask it basic stuff, but how specific is it going to be to what your question is? And how do you know it's right? I think if you're an expert and you're asking it to, clean something up or maybe assist you with an Excel formula, there are some ways to optimize your day. But I wouldn't go in there and ask it for some financial guidance or how to read a financial, because, they don't know your business. Now, over time, they're going to start learning, hey, this is everything we do in our business, and they can replicate it. But we might be talking 10, 20 years from now.
Yeah. Yeah, it's interesting. I think it's going to have a huge impact across the board. Interested in thinking through how it's going to change our business. And we already use a lot of stuff here with the way we do like portfolio accounting, back to the forms that you're talking about. I mean, there's definitely going to be opportunities to automate some of that through AI. And I'm just thinking through the ways, some of our veterinarian listeners will be able to do it. It's definitely going to be something they need to be attuned to. But to me, again, like having somebody like yourself who's involved with a lot of small businesses, who's constantly trying to figure out how to make it more efficient, like there's value in that, because you're going to find out what's best in class. If you have everything internalized and your CFO, for example, has one client basically, which is you're not going out there and learning all the new stuff. So I think there's a lot of value in that. And that's one of the things we do here at SignatureFD as well. So,
well, I mean, I guess, kind of maybe along that lines of talking about like value and, just take a few minutes here as we wrap up. And, I mean, obviously you'll lean into one of your stories, but I think whether somebody chooses to work with you or work with anybody else on a financial reporting case, obviously I'd argue, hey, working with Eric is as good as it gets. But can you maybe share just a little bit of a case study on the impact it's had for a small business owner or a veterinarian or another doctor, from a personal time, from a growth, from, better understanding, or maybe quite frankly, even just sleeping easier at night because they know they can pay their bills and they're not living by their checking account balance?
Yeah, I could probably tell you 100 case studies across different industries. And we've seen it all from, zero in revenue to, over $1 billion in revenue, which is great. And we've grown with some of our clients over 5 years, which we could only hope for. But, I feel like I keep going back to this word optimize. I think that and adding value is so important. So one scenario is a medical practice here in Georgia. It's a guy, it's a doctor, and he was able to, instead of having one practice, seeing his patients every day, he was able to now grow to 3 practices where he's now able to have other doctors come in, see patients, and he can be more of a CEO, CFO, which it might not be for everyone where you want to do that. You might just want one small practice and you want to just focus on your patients every day. But first we came in and we got them off QuickBooks Desktop. That was number one. They got to get in the cloud. So we forced them to do that. At that point, we had already done some consulting with them and helped them review their books to get their tax returns done. At that point, they had 2 practices. So we got both in the cloud. Now they have a 3rd practice. We're doing the books for all 3 of them. Now we've kind of had some meetings with him that train him on how to export reports and how to look at them. So we've shown him how to export them to Excel and just how we as finance experts would look at those. Now, he's come a long way from working in the practice to now working on the practice. And they've been a valuable client for roughly 3 years now, and they've grown. And he is able to spend the weekends with his kids. He actually had a personal matter at one point, which he needed to take a lot of time off. And he was able to do that because he previously took a step back and allowed us to do, all the accounting work. So, it really just depends on what you want from your business, whether it's growth, high growth, which, this guy, for example, it's him and his wife that grew a practice. They might have 5 practices in a couple of years, and that could be 10 in 10 years.
It sounds like, the good, clean financials allowed him to access capital.
Yeah, he had to have it.
Allowed him to, see how he was doing, allowed him to have comfort in making that incremental investment. But, I think it sounds like it really started with him really sitting down and thinking about breaking down all these different tasks, right?
One of the big items that he took away was looking at his cost by department. Like, what was the front desk cost? Or the doctor? What was he paying for everyone? And why was it moving so frequently? So that was one big takeaway from him, just being able to look at his financials and see the breakout by department.
Well, and that's that leads into this whole chart of accounts and calibrating and optimizing, right? Because, the AHA chart of accounts is going to give you detail to see that. And you guys are going to be reporting those in the right general ledger account as opposed to payroll.
Inaccurate.
Right? Payroll is a great number to know, but you can't do a lot with it. So no, that's really cool. James, I don't know. Do you have anything else before we let Eric go?
No,
go back and crunch some numbers and prepare some financial statements.
There you go. No, I feel like you go with your question. We'll get out of here.
Well, so I guess kind of everybody we always wrap up with, Eric. There's a saying that hangs in one of my friend's bathroom that says everybody wants to change the world. Nobody wants to change the toilet paper. Do you actually change that? You're an accountant, so that's not even worth asking this question. You definitively don't leave the bathroom without changing an empty toilet paper roll.
Yeah, I'm pretty OCD about those things. The wife does use a lot of toilet paper. That's, oh boy, I'm sure you guys can relate.
Well, it kind of, we always finish it with that, but then, if you did have one piece of advice for somebody who wanted to change the world, what is that piece of advice?
It's going back to being proactive. You got to just start every day. You got to eat good, sleep good, treat people well, have an optimistic mindset.
And have clean financial statements.
Get back and optimize.
Travis, you beat him to it. I'm sure that was coming at some point. Awesome, Eric. It's been great, man. We really appreciate you coming in. It's been the Vet Worthwhile podcast. Our guest was Eric Josovitz of AdaptCFO. How do they find you, Eric, if they want to get in touch? What's the best way to get at you?
You can go to AdaptCFO.com. You can email me at eric@AdaptCFO.com. It's Eric, ERIC. Yeah, email. There's a form on our website. Yeah, appreciate you guys having me.
Yeah, great. Awesome, man. All right, well, thanks, everybody. We'll see you next time. Thanks again for tuning in to the Vet Worthwhile podcast. You can find us online at signaturefd.com/signature-veterinary. And then our ask would be, if you found this episode valuable, just think of one friend or colleague that you think would enjoy the content, and just please share. So thanks again. We'll see you next time.
Travis York is the owner of 3-in-1 Vet Advisors and a partner of SignatureFD. 3-in-1 Vet Advisors is a veterinary consulting and strategic planning firm of which SignatureFD has no involvement or ownership. James Yost is a partner and wealth advisor at SignatureFD. SignatureFD is an investment advisor registered with the U.S. Securities and Exchange Commission. 3-in-1 Vet Advisors and SignatureFD are not affiliated. Mr. York provides all non-investment advisory services through 3-in-1 Vet Advisors. The opinions of the guests and the contents of this podcast are intended to be educational only and should not be relied upon as investment, tax, business, or planning advice. You should consult with a professional advisor prior to taking any course of action that may impact you or your business.